One important part of stocks that I feel like we do not talk about enough is the mental side of things. Specifically, today we're going to be looking at the term avoid the noise or ignore the noise, which is a good piece of advice. When something, you're going to get daily, oh, this about the stock, this about the stock, oh, this guy downgraded the stock. And it's going to be like a 1% to 2% movement. And at the end of the day, it doesn't really matter. And if you sell off at that, you can miss potential high upside. That is a good piece of advice, but how do we specifically differentiate the difference between noise, something that doesn't really matter, and something that's actually groundbreaking, a huge piece of news? You should sell the stock. It's rare, but it does happen. And it's important to actually find that distinction because it can save you, if something really bad were to happen. I think a good example of this, obviously, I'm assuming if you've been around the stock market a long time, you've seen this, but just recently we had the whole DeepSeek thing, right? If you don't know, China released an AI model that was pretty competent. Some people say it's better than ChatGPT. Most people don't, but still they claim they made this with using like $5 million. Now, we don't really know what that means, and if I'm being completely honest, I don't believe that. Information out of China isn't always 100% legit. They fudge numbers, they just outright lie many times. However, they either got advanced AI chips, have an incredible model, whatever it may be, an algorithm, something like that. But still, there was shock in the stock market. You saw NVIDIA fall 10, 15%. TSM fell 12%, something like that. You saw some of your maybe smaller, more riskier, high growth, high upside stocks fall maybe 20. I knew some that fell 30% that day, right? And that a lot of that is noise. And how do I know that's noise? Because when you look at it, let's take a little peek right now at NVIDIA. NVIDIA fell that day, right? They fell and they've basically recovered for the most part. I think it was here. Maybe I'm wrong, the 24th. But either way, it's recovered quite substantially from that. And at the end of the day, it really is going to probably be noise. So it's difficult to differentiate noise, but let's dive a little bit deeper into what I'm talking about. So this information is generally going to be more geared towards long-term - medium-term investors. Not that you can't learn anything from trading. Believe it or not, my channel is named The Common Investor, so I focus mainly on investing. So when I say long-term investing, I'm talking 5+ years. When I say medium-term, I'm talking 3 to 5 years. That might sound like a bajillion years to you. However, in long-term investing, that's kind of the time frame we use. So if you're trading even 1 year, hey, I think in 1 year this is going to go up, maybe it doesn't apply to you because if you're looking more short-term time horizons, noise can affect you a lot more. But something like a person who's investing in NVIDIA for 10 years, like, hey, I think in 10 years, NVIDIA is going to continue to do very well. Maybe they'll be the most number one company. Maybe they won't. I don't know, but I think they're going to do well. That's a very different than, hey, I think in a year NVIDIA is going to be at 1,800. Or it would be 180. I'm still not used to the stock split. And 180 in 1 year, that's still very good performance historically. But anyways, so if you're looking at a long-term, medium-term investing, upgrades, downgrades, completely ignore it. Like literally completely ignore it unless it's tied to specific bad earnings. Like the company saying, hey, we're going to do 15% this year. And then they do like 2 or like 7, half of what they're expecting, or even dramatically worse. We saw Intel on a run there. From COVID onward, where it was just downward. It was like they were missing by I think it was like, hey, we're going to do 17 billion in revenue this quarter. They did like 14, and earnings per share was just as bad as you would expect from that as well. And it was just that over and over and over. That isn't noise. That is the company just being wrong consistently. If they're missing on earnings consistently, and it's bad. I mean, if you're like per year projecting 18% and then you do 14 because you missed, that's not that big of a deal because you're still growing faster than the average company, assuming you're valued roughly like an average company. But if you're saying like, hey, we're going to grow 12% this year, and then they do 2, and then next year they do 4, and then next year they do what? It's like, that isn't noise. That is a company that doesn't either they don't know what they're doing. They don't know their company good enough to actually project how much they're going to grow and how well they're doing. That is a bad sign. Or B, they're lying to you. So that isn't noise. That's probably signs of a not well-run company. Another example similar to what we saw with DeepSeek, when a specific piece of news hits a sector, it's down 3, 4, 5% that day. If it's just one data point, you can kind of ignore it. Like you'll see, like for example, if DeepSeek, it wasn't just China. They're like, oh, we made this AI algorithm for $5 million. Look, it's as good as ChatGPT. You know, if we saw someone from India, another company from India, another company from Russia, a company from, I don't know, Egypt, Belarus, something like that. If everyone can make an AI model for 5 cents, then yeah, the $20 billion being poured in by Microsoft might be an actual worry. But if just one company did it, you have no idea how they did it. No idea. So until we see people start replicating that, if it's just one data point that the market panics on, that's probably just noise. It probably is. So if it hits the sector for 1 or 2 days, you're down 4, 5, 6, 7, even 10%. And I really wouldn't panic too much as a long-term investor. Obviously, as a trader, 10% can be just huge. And of course, there's other examples of noise. I can't hit all of them, but specifically ones that are like one data point. This one person downgrades. Oh, the person at Morgan Stanley thinks the market's going to do horrible over the next 10 years. Okay, who cares? Maybe you're skeptical of what I'm saying. I'm diagnosing too much as noise and you don't really believe me. That's totally fine. You can agree. We can agree to disagree. I'm going to give some examples of things that isn't noise. I talked about a little bit earlier, but earnings. When a company is consistently missing earnings, they seem to be not knowing what's going on. That's a big red flag for me. I'm not talking even 1 year. Maybe it was a bad year. Look at what the sector's doing as well. Are companies performing well? For example, 2022, every freaking company was getting demolished, certainly in the tech sphere. So that's a little bit different. But the company is doing poorly. You don't believe in the vision as well. That's another big one. If you don't believe in the vision, you misdiagnosed it, totally fine. If you own like 30 companies, let's say something like that, and then 1 to 2 to 3 a year you decide to sell out of because you don't really believe in what's going on, that's fine. But if you're maybe turning over 10 to 20 a year, maybe you need to do a little bit more introspection, see what's actually going on. But another example, SMCI, right? Probably quite a few have heard of them. Maybe you've got burned, maybe you made a little bit. I got in kind of around 40. It was 400 at the time. They did a 10 split. I was lucky enough to sell some above 1,000. I let some of them ride. And then there was mega panic because they got in trouble years ago for fudging with numbers. It wasn't like an Enron thing where they're completely lying, at least not this time. They're alleging they're counting future orders as future orders as revenue now, which is illegal. You cannot do that. That was what they're alleging. We still don't really know. However, it's totally reasonable to not want to own a stock that might be delisted, might be fraud. Like if they're doing illegal things, that is completely understandable why you'd want to sell out of that. And a lot of people sold out at the bottom or near the bottom. I sold out quite around 300. I still made money total on the stock, but I sold out of most of my shares. And if you were to hold a gun to my head and say in 2 years where I think SMCI will be, some of you are going to hate me for saying this. I probably think in 2 to 3 years it's probably going to be over 1,000, maybe 1,500. But the real chance, let's say 20, 30, 50%, that they may be delisted, that they're doing illegal stuff, it's totally understandable to want to not be invested in that. This is a good example, even at a loss, where you should totally be comfortable with selling the stock and just saying, hey, investing, you're going to make a lot of money. You're going to buy a stock and it's going to go up 40%, 50% a year in NVIDIA maybe, if you're lucky. But there's going to be times where just companies are being stupid and you're just going to lose a little bit of money. That's just the reality of investing. So something like what SMCI did, actual fraud, they're firing their auditor or something, that is totally reasonable. That is definitely not noise. It really depends on how big it is. Anyways, I covered what I wanted to in this video. If you guys enjoyed, I appreciate if you like or subscribe. I tried to do near daily stock content on this channel. Sometimes life gets in the way, but I appreciate all of you for watching. I'll catch you next time.